Well, a lot has happened in the last few days. What does it mean for your money? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon and welcome to the Prudent Money Radio Show. I'm your host, Bob Brooks. Thank you so much for joining me today. You know I do appreciate it. Well, if you got a question for me, would love to invite you to go to the website at www.prudentmoney.com. Once you get to the website, just go up to the top of the page. There is a link that says Ask Prudent Money. Go ahead and send us a question and we'll get you taken care of. That's all at the website, prudentmoney.com. Well, a lot has happened, let's just say in the last 7 days, last week or so. And, you know, we talk about watching the environment, watching things that happen, and really trying to come up with the answer to the question, what does this spell for me in regards to risk? And making sure, I think it's the foundation of stewardship, is to make sure that you've got that risk aspect of your investment strategy worked out, that you're at peace with it. Excuse me. And being at peace with it you can only get to that place with God's involvement. So today, what I wanted to do, I talked about a lot of this yesterday. And of course, there was, quite a bit that happened at the State of the Union that was said, and but probably going to not go over that, and talk a little bit about what all the actions and things have taken place. What does it mean as far as risk goes? What's it mean for your retirement, for your portfolio? And talk about some of the questions and the answers that are on the minds of listeners. Let's start with the first one. Dear Bob, could you explain what will happen to consumer costs now that we know these tariffs were not even legal? And I just want to say one thing. I think it comes down to, instead of legal or illegal, I think it comes down to whether he had the ability to execute an executive order without the involvement of Congress along with that executive order. So I think that that's really not so much as legal or illegal, but more so that it is that he had the ability to do that, to take those actions. I guess, if you to simplify it and to keep it very simple, is that the Supreme Court is there to look at the actions taken by the president to determine as far as the way the law is written, if he had the ability to actually make those moves, sign that executive order, which he come to find out now he doesn't have the ability to do that, and so that strikes all those tariffs down. But kind of in a interesting move, we'll say it that way. The Supreme Court's decision does not mean Trump is now entirely unable to slap tariffs on other countries' products. The president, for example, has at his disposal Section 232 of the Trade Expansion Act of 1962, the same tool he used to impose import taxes on steel, aluminum, lumber, and furniture. Trump called the decision deeply disappointing in a statement at the White House and told reporters that he would impose a 10% global tariff under Section 122 of the Trade Act of 1974. He also said the administration will open several Section 301 probes, whatever that means. The U.S. will take in more money through other tariffs in place of the tariffs, according to Trump. He immediately, on the next day, which, I mean, should be no surprise, raised that global tariff from 10% to 15%. So, it's one of those things where did the tariffs go away? And just real quick to make sure we're all on the same page, what a tariff is a cost that is shifted to the country who is trying to sell, it's charged to the country, that is trying to sell products, goods and services in our country. So if a widget cost $10 and had a $2 fee, a tariff attached to it, then it would go for $12 as the base cost. And that's at the heart of it. It really just more or less defined what he could use to back up any future decisions, because they're going to be there. He's very, very intent on these tariffs. And we'll talk about this in a little bit, but it's unfortunate because tariffs are very inflationary and cause inflation. And this is kind of what we're seeing as the theme, that we're talking about it, we're seeing it, we're feeling it at the grocery store or wherever. And in Washington, especially Trump, acts as if it doesn't even exist. So we have two realities going on. I'll leave that one for you to make your own decisions on. But it's an interesting and definitely interesting scenario. Now, when a country has to pay a tariff, they do have really four options relating to their next step. They either pay the tariff and eat the cost themselves. They either do that or they pass it on to the consumer and the other country they're selling to. They find another trading partner. So let's say that China was doing a trade agreement with the U.S., didn't like the deal that they came up with, stops doing business with the United States and goes and finds somebody else to do business with. Or it could be a combination of they'll eat part of it, the consumer will eat part of it, and that's the way it goes. So that's the first thing that we have to look at. And the issue is, what's the effect on prices going forward? And it was very interesting, which brings us to the second point, is that prices shouldn't come down. Now, what in the world do I mean by that? Wouldn't you expect them to come down when you remove the catalyst? And in an interesting study, that I happened to stumble across, says that the consumer, at the point that the consumer gets accustomed, gets used to paying the higher dollar amount, then it's I don't know if it was 100% of the time, but I think it was a very high percentage of the time, those prices don't ever go back down. They stay at that level or higher and climb higher. Very interesting, because I think that's exactly what has happened. Is that we've gone, and I use the grocery store because that's what I do, the shopping for my house, and it's just kind of the way it all splits up. And so I'm very in touch with the prices. I look and watch these prices, have been very intently over the past 7 years, and watch them move. I think the funniest one to me was those ice drinks, bottled flavored water, and those would always go for $1 a bottle. Well, walked into Market Street this I don't know, two or three weeks ago, and got to that place, and sometimes they'll say 5 for 1, or they'll say Typically, when they put them on sale, it's 5 for 1, but they're always usually $1 a piece. And they had a sign stand on the ice bottles that said something to the effect of 2 for $1.50, no, 2 for $3. What a sell! What a low price! I'm like thinking to myself, no, the $1 a bottle was a good price. So I guess a little bit of playing with numbers and playing with marketing to make it seem like it's not so bad. So there is, that's the problem, is that prices should come down, but they, according to the study, they won't. And you can also see this, what happened in COVID and what happened when prices at restaurants went up, way up, fast food went way up. And then the whole restaurant community seemed to go up. And to this day, you've not seen those prices go back down. And so, it remains a problem, regardless of what politicians say about it. And it's something that it looks like it's going to be added to. Because at the end of the day, do you really think that a Russia or a China or whomever is going to say, "Oh, hey, don't worry, you can charge those fees. We'll eat it. We'll take care of it ourselves. We won't pass it on to your citizens." But that's what's been happening, and with more of this coming down the pike, who knows what inflation is going to look like? But to say that prices are plummeting, I don't know where that's happening. I mean, it could be wrong, but I don't know. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. If you got a question for me, prudentmoney.com is the place to go. We're up against a break. Stick around, and I'll be right back. Hello, this is Bob Brooks. Proverbs 22:3 and Proverbs 27:12 are the exact same verse word for word. I call them the stewardship verses of risk. A prudent person foresees danger and takes precautions. The simpleton goes blindly on and suffers the consequences. On the Prudent Money Radio Show, we teach about risk, how to identify it, how to figure it out, and what to do about it. We believe that to be a prudent steward, you have to be a good risk manager. Listen to the Prudent Money Radio Show on Bible School Radio 91.3. Prudent Money, home of the modern-day steward movement.
Dynamic, practical, life-changing.
There's no point in going to church and not letting the Christ who gave birth to the church on the day of Pentecost change your life.
Join us each day as Pastor Paul Shepherd applies the timeless truth of Scripture to everyday life. It's Destined for Victory on this great station.
Weekday afternoons at 3:30 here on Bible School Radio, KDKR.
This is Rob Randall, your host and teacher of the Invisible War radio program. The Invisible War is the study of God's Word on how to walk in Christ's victory in the spiritual battles we face against the powers of darkness. Join me every Sunday morning at 9 right here on KDKR and KYJC in Commerce, your station for life.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Talking about the decision by the Supreme Court, talking about inflation, really going to get into it in this second part of the program. Dear Bob, President Trump made the statement that inflation is dropping dramatically. How is that so? This is not a Trump thing or anything. It's a politician thing. Numbers, they tend to play with numbers and represent them in ways that may not be all that right. I mean, just about every president that I've paid attention to over the past 5 decades, 6 decades, almost 6 decades. No, we'll say 5. I'm not that old. But the ones that I've watched, they play with numbers. And so, to say that it's dropped at all, not even dramatically, is, I think, a misrepresentation of the facts. But we definitely have that pressure here. Tariffs by themselves are inflationary. Then that's the problem. So it's the question is, how do you get out of a inflationary situation when you're continuing to add more to the back end? And that's what tariffs do. I think going forward, inflation could be the real problem. But there's also a lot of steps you can take to counteract inflation that I don't think people actually take the time to look into. We're going to talk a little bit about that and get to that as well. Dear Bob, you haven't mentioned AI stocks in a while. What are your thoughts on them being a risky investment? Artificial intelligence stocks are the stock that's in the big trend that you're going to make all the money on. And a lot of people have made a lot of money on it. The problem is not any different than what you saw during the tech bubble, where you saw companies, their stock price go crazy, and at the end of the day, they had nothing to back it up. So investors at that point realized that I've been putting money into a stock that has really no value to it, and I want to sell and get out of it while I still can. Of course, that drives the price of the stock down, and the way it ends up, the stock market comes down with it. Artificial intelligence, there's absolutely no question it's a real thing. It's much different than the tech bubble. They're ready to go. Companies are ready to go to put it to good use. The problem is, though, is that it's I don't think it's a very understood technology. I think that if a CEO has a choice to jump on board and go forward at full speed versus hanging back a bit, because he's going to have to lay off half of his workforce because he won't need them, because AI tends to replace employees. I think there's going to be a big sense of hesitancy. And I also think that people are even more hesitant on doing something or involving themselves in something they don't really understand or have a comfortable feeling with. So it's I think that's a real problem. So that may be that AI stocks are way before their time, and you still need a number of years to get these things fully adopted and accepted into our environment the way it is. I don't know, but we're starting to see, though, AI stocks lose money because there's just no way to back up that stock price today. That's my take. I know that there's people who think way differently than I do on it, but that's the way that that I see it. Dear Bob, what are some of the mistakes that investors are making right now? Well, a lot of the classic mistakes that investors are making have to do with the same things that investors always make in these bubble environments. And yes, we are in a stock market bubble. Totally believe that. There's four main ones. Creating the belief that if you don't participate in this current bull market, you're going to miss out. And it's almost as if this is the last train out to a great retirement. This is my last opportunity to build wealth. Listen to me. That is the furthest thing from the truth, even though it might feel that way. Even though that Wall Street loves the fact that you feel that way, it is so far from the truth and will end up causing you so many problems trying to operate under that belief system. There are tons of opportunities to make money, and it's just a matter of identifying them and investing with them. And there's plenty of times where there's been big, strong bull markets, and there's so many opportunities. So don't get sucked into that notion that this is it. And if I miss this, I'm going to miss everything, because it really messes with your decision making. It messes with your emotions. It puts you in a situation where you become an emotional investor than an intelligent one. But people will make you feel that way. Just don't believe it. This is not the only opportunity going forward. There's which is tied pretty close to this, the fear of missing out, or the fear of not being able to do a catch up where you make up for lost time. Riding the easy to make money waves. I mean, it is all lots of fear and greed. And then most importantly, I think the non-understanding of how collateralized investments work. And I mentioned this a couple of days ago, said I would talk about it. I'm going to talk a little bit about it here in the last segment of our time together today. Correlated investments are a very important strategy to be considering. And basically, it goes like this: a correlated investment is going to go up and down with other correlated investments. So stock is a good example. Let's take Microsoft, which has had a really tough time. Microsoft and Apple, they should go up and down about the same directions as the market goes up and down. Because they are correlated investments. They both do the same thing. They're stock. Versus non-correlated investment, where your Microsoft may be going up, but your other non-correlated investment might be going down, and it may be making money for you and offering that advantage and that benefit of two investments, one not being correlated with the other. I hope this makes sense. It's a little bit easier to do this in person. But, most situations that you see and read about are correlated. They all go up and down at the same time. So if there's a bear market that hits, and one will hit at some point, then everything that's correlated will go the same direction, which is typically stocks, which is typically on the downside. And what's interesting is that people mistake investment genius for simply being invested in correlated stocks. And it's something, I mean, people do it all the time in their 401ks. It feels good to be right. It's tough not to be right when you've got everybody investing in the same thing. It all goes up and down the same thing. Now, as things go down, people start to feel a bit different. And we'll be keeping a very strong eye on this. But it's important because the ability to shift matters. When you're 5 to 10 years from retirement, your strategy should change. But that's not what you're taught by pop culture finance. That's not what you grew up on learning and how investments work. But that is how investments work. When you're looking at retirement, you're switching from building wealth strategy to preparing to use it. But the hidden risk is that investments that move together. When the market is doing well, everything looks great, everything's going up. Correlated investments move up and perform together about the same. And, when that happens on the other side and everything goes down and there's not anything in there that's non-correlated that can give you the opportunity to actually make some money, it can delay retirement. And that's my concern today, is that investors are not taking a step back and saying, okay, let me take a hardcore look at what I'm doing, what kind of risk I'm taking, and what does all this mean. So that is, as I wrap up things, that's the most important thing that you can do is understand the risk you're taking with your investments. And it may be a high risk, and if you're comfortable with it, you're at peace, that's fine. Get there and check that box before you do anything further. I think it's a stewardship principle, and I think it's important. This really isn't about saying that you have to be conservative. It's all about saying you've got to know where you're going, what you're doing, and that's the most important thing. This is Bob Brooks. If you got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.